Good afternoon, everybody. Welcome back to Ageras. My name is Brandon, and today we're going to be going over the Payroll Protection Program, aka PPP Loans. Looking for an easy way to find an accountant for your small business? Head to Ageras.com to receive your 3 free quotes from our large source of trusted accounting professionals. Ageras, finding an accountant has never been easier. So if you're a business owner in America, you've probably heard about these over the last year or so, and you may be asking yourself, what exactly are PPP loans and how could it benefit my company? To start simple, the PPP loans were implemented by the SBA, or the Small Business Association, to assist businesses with payroll during the COVID crisis. This was incentive to keep employees off of unemployment and keep them on payroll. Now, the first round of PPP loan applications opened up early 2020. You may think it's a little bit too late, but you can actually still apply for the first round of PPP loans if you haven't already until March 31st, 2021. If you're just applying for the first round of the PPP loan, you don't have to show any proof of reduction of revenue, unlike the second round, which I will get to later on in the video. However, what if your business already received the first round of PPP loans and the funds are starting to run dry? Luckily, the SBA is working with the US Treasury to supply a second round. The criteria for the second loan, though, is a little bit more strict than the first round. The requirements for the second round are as follows. A company needs to have 300 or fewer employees. They need to show a reduction of at least 25% in revenue in the corresponding 2019 and 2020 quarters, and the company needs to have used all of the PPP funds from the first round before the second round disbursement. If you receive the first round of the loan, calculating the second round is extremely similar to calculating the first. The primary difference between the first round and the second round is that now you have the option to use payroll amounts from either 2019 or 2020. It is said you should calculate the potential loan amount for both years and use the one that gives you the highest result. That way you're making maximum use of your PPP loan. If you end up using 2020 as your loan calculation, be prepared to provide your 2020 Payroll Tax Returns. These are Forms 941 and State Unemployment Record. If you end up using 2019, make sure you use the corresponding year's tax return forms. If you end up meeting the requirements, you're eligible for up to 2.5 months of average payroll costs. This includes employer retirement, healthcare, and state unemployment tax. Also, if your business falls within the accommodation and food services sector, you might be eligible for up to 3.5 months worth of average payroll costs. So to summarize, there really isn't much of a difference between the first and the second round of the Payment Protection Program. The main differences are the requirements for applying, as well as the fiscal year you use to calculate your loan amount. If you have yet to apply for your first round of the loan, I would highly suggest it. The loan is definitely helpful with relieving a lot of the stress that comes with running a business through COVID time. Also, a lot of your employees might be thanking you because they can stay on payroll and they don't have to file for unemployment. If you have any questions regarding the Payroll Protection Program, feel free to ask them in the comments section below. Also, be sure to like the video if you liked it. Lastly, don't forget to subscribe and hit the bell notification icon so that way you don't miss any more videos from Ageras. Thank you very much for joining me today.